by class. At year-end 2010, total inventory for the market remained unchanged from year to year at 39.8 million square feet, with 5.63 million square feet of vacancy, resulting in a 14.2% vacancy rate for the year overall, which was up a percentage point from year-end 09. That's resulted from 362,000 square feet of negative net absorption, with an average asking rate for available space of $26.08 a foot, which is fully gross up. When we look at the 25 million square foot Class A market, we see that there was 300,000 square feet of negative net absorption with an average asking rental rate of $27.73 and vacancy of 13.7%, up from 12.5% at year-end 2009. The almost 13 million square feet of B space in the market also saw negative net absorption of about 90,000 square feet, and vacancy rose from 14.5% to 15.4% over the year, with an average asking rate of $24, also fully gross. And then the C class, which is the smallest of them at 1.5 million square feet, saw positive absorption of 32,000 square feet, which actually resulted in a full 2 percentage point decrease in vacancy to 10.7%, showing the size of that particular segment of the market. And that had an asking rental rate of $19.35. Here we look at vacancy rates by class over the last 25 years. This should roll in here. There we go. A, B, and C classes here are represented by blue, red, and green respectively. The C class shows the most volatility, with vacancy approaching 30 and 35% in 94, 93, and 94 respectively, due to flight to quality after new A inventory was delivered to the market. After repurposing much of the C space to residential use in the late 90s, the vacancy rate returned to more normal levels for the last decade. The A and B class each saw vacancy rates over this period typically below 15%, enjoying their lowest levels in 99 and 2000, and A vacancy then peaked in 2004 at 18% due to corporate downsizing, and trended downward until 2008 before climbing to its current level of 13.7%. The B class has also enjoyed relative strength of below 13% vacancy overall since the mid-1990s, yet in the last 2 years it's climbed to over 15% for the first time since 1994. And we expect this trend to continue. From 01 to 04, we see 2.85 million square feet of negative net absorption during the down cycle, followed by 4 years of economic growth with a cumulative 3.7 million square feet of positive net absorption from 05 to 08. In 09 and 10, we returned to a negative absorption combined of 1.42 million square feet. And of note statistically here, 800,000 of the 1 million square feet of negative net absorption in 2009 occurred in the B class in very few, I think it was a couple of buildings. And then in 2010, by contrast, we saw the A class accounting for 84% of the year's contraction. In fact, 6 firms accounted for 77% of the last 2 years of givebacks at 1.1 million square feet. This slide shows historical asking rent spreads. Here we're looking at trophy, A, and B space. The trophy class has seen the most volatility in quoted rental rates, ranging from a low of $27.73 on average in 2004, when the spread between trophy and A space was just $3.50, to a peak in 2008 when trophy space averaged $39 a foot, and the delta here was a healthy $12. Over the last 2 years, this differential has decreased to $9 as the economy has retreated. Class A and B asking rents have moved in a more lockstep fashion, with the spread historically at about $4 a foot. Since 2008, however, that spread's compressed to only $2. And this reflects an anomaly in the market due to two buildings with high vacancy offering their space in the mid to high 20s.